Shidim Shari. Okay, Palantir. I did trim on this move up here. I did get stopped out on this move here. Not stopped out on portion of my share. I kept 1/3 of my position um, that I bought down here, down here. Okay, down here and here. So I'm glad that I kept 1/3 of the position, and those likely I was debating. Trust me, when I got stopped out here on portion of my holding, I was debating should I put a stop on the low of day here and be out. And I said, well, there is a long-term story with Palantir that I liked. I'm not a cult follower. I talk about Palantir that there's a cult following there because it just is. There's a couple of stock that I'm sure if you are active on the YouTube with investment, Palantir is one, Tesla is the other one, and then another one that I saw popped up constantly on my recommended video to watch is SoFi, and I'm not a fan of SoFi, but maybe I should do something on SoFi one of these days. But Palantir, I liked it. If you have it and you're looking to trim, certainly use a fib. I put on a fib extension when it hit the 52-week high back here. And if you're looking at maybe 35-ish, and then of course 36-ish, because you are talking multi-year high here. Okay, so it is in rare air. Yes, I think you gotta go back to IPO. Yeah, see, IPO. Where I trimmed last time was of course the gap fill. Okay, that was where I trimmed the gap fill, and then it went higher. And now, can we get all the way to the all-time high of 45? I wouldn't be surprised. Okay, I'm not saying this month, next month, but long term. By long term, I mean 6 months, 9 months. If there's anything that they do have is a growing acceptance in corporate America. If big businesses want to use Palantir to cut costs, be more efficient, that's maybe what they are selling as far as their AI. Of course, they tout a lot more. They tout all kind of advantage of competitive advantage. Who knows? But I'm holding on to that last 1/3 for a long run. Okay, and as far as adding more, yes, you know the rule. If you're new, on a gap up, if you want to buy, don't chase it. There's always sideways movement, consolidation. Well, let's review. Okay, for those that's new, on gap up, there are 3 potential scenario. There's more than 3, but key scenario is gap up and slide. We don't want those. I'm sure I can show you plenty of example of gap up and slide. Look at this. Okay. Well, this is an example of gap up and consolidate. Gap up, move a little bit higher, consolidate. Gap up, consolidate. And consolidate is a lot of time it's sideways and then up. A lot of time it is sideways and up. But this is not. Palantir have a pattern of gap up, consolidate, and then it's kind of slide and fill the gap. Okay, this time it did not, but it still slide. And you can see the rule is when you have a gap up, you can have this kind of strong movement and continuing. There are stocks out there that gap up and then keep going, okay? And then there are gap up and then slide all the way back and fill the gap. Okay, that's the third scenario. Gap up and just boss and boss and boss. Gap up, sideways. Can Palantir change the pattern of gap up and not slide and not fill the gap? We don't know, but as a rule for myself, I can't say for other people, I like to put in a buy order if I want to add. Right now, I'm fine with the position I have, but if I was to add to Palantir, it would be the low of the gap up is, let's see, where the candle is right there, 32.6-ish, okay? That would be one spot. And then if you want to even be more safe, it would be sell put 31. To me, that would be the easiest thing to do for myself, is sell a naked put at 31. Because if for whatever reason that there is a market meltdown, likely Palantir can get taken back. And would I mind adding 100 share at 31? No. At this point of the game, no. Okay, for long term. So yeah, sell a naked put at 31 is not a bad idea either if you want to add shares there. Hershey. I watched Hershey for a long time and I just have not taken any position because look, it has tested this line many times, right? You see this, and it has not broken out. But yesterday was more of a convincing day. See, look, the last time it did this, okay, first of all, you have a lot of failure, okay, and then back in May, you have this nice candle, and then it went to the next level of resistance, and then quickly take to the woodshed and came right. No doubt, if you look at this, okay, no doubt this level here, the 182, 183 is a no-brainer, okay? It's a no-brainer to buy. The question is there's going to be a follow-through, okay? And potentially 5% move, okay? So it's not like a huge deal, but still, I never ignore 5%. I love to see 10% potential, but 5%, yeah. If there's a pullback into the low 190, absolutely. Now, the one good thing about Hershey is, compared to last year, tax loss, okay? Oh my God, tax last year, it was one of the worst. Look. Oh my God, last year, wow. Okay, first, let's review. This is why that zone, that gray zone, is a rapid liquidation last time. You're talking about regret holders, okay? Can you imagine all these people here, all of them that didn't sell the last time it came down to support and held on? Boy, did they have to suffer, right? You're talking about a good 9 months from September all the way to May. 8 months of hell that they had to deal with. And then so when they see this again, they're just like, oh, please get me out. Please. I learned my lesson. 8 months. Please get me out. I don't want 10% lower, right? So that's what happened. Perfect example of regret holders piling on, okay, at resistance. Now, does that mean that it's done? Maybe. The one thing it does is, so rewind to 2023, tax loss selling in September and October. Wow. And all the way to year end. Okay, so you get one of the worst tax loss beating that you can get. I mean, there's a lot of tax loss stock last year, if you look, that came down into the end of October and then bounced into year end. Okay, they went higher in December. Not Hershey. It was a relentless selling, selling, and selling. Not this year. So it's on watch. Okay, on pullback, mid 190 into the 20, into the confluence. Yeah, but if it's a breakout, if there's a strong breakout into this gray zone and check back, that could be the buy-in that have more conviction, because who knows, when we get back up here again, you can get some massive selling again. Okay, so it's on watch. I wouldn't mind buying lower and then trim into that 211 zone. Okay, what is the other one that I want to talk about? Hormel, I missed the earning dump. There was an earning dump. Okay, the earning was not good. Not terrible, but not good. And there was a dump, and boy, did I took my eyes off that. And yeah, would I have buy this at 29? Absolutely. Okay, I like Hormel, trust me. I like, see, this zone, consolidate here, and then move up. Yeah, it didn't, on earning, it didn't last long. It lasts one day. Next day, it already move out and then up. Okay, so I learned my lesson. I haven't ordered at 30. It sit there at 30. For whatever reason, if this thing come down to 30, I buy again. I might throw in another order at 31. Okay, just for the sake of buying something in the zone that I like, because there is a zone. Does it mean that we miss buying opportunity in Hormel? I don't think so. Okay, guidance was not great, but it's not terrible. And spam is spam. I still like my spam. In fact, I ate some spam. I had spam for lunch, I think. One of my favorite things to eat, one of my favorite meal is breakfast or lunch or brunch is, eggs and sausage or bacon. But occasionally I do spam, and I love that. I love that. Yeah, yeah. I like my spam. Spam is spam. Yeah. So spam. Would I chase it here? The answer is no. Uh, there could be a breakout, but for now, let's do this. Let's do this. Let's do. I don't see, a reason. This is another stock that I don't see tax loss. Okay, I don't see tax loss beating. Let's go 3 here. See, last year, I'm telling you, you're talking about a nasty October. Look at this thing. See, it start the year up here, right? It start the year